Hello guys, and glad to have you on board again. Today we are going to update our stock market stuff. As of what's been said yesterday, we now have a presidential debate. How boring that was, I can hardly state. I've actually looked at the entire stuff, and my personal belief is that I don't know what are your personal feelings about the candidates, but anyway, I think whoever you were supporting, you probably won't change your mind. And what matters to me is what the indecisive people would actually figure out of this very long and painful debate. I don't think there's actually not a single clue to orientate those who don't know who to vote for, which leads me to believe that uncertainty remains at its highest level after this first round. There's going to be 3, so I expect the next one to be hopefully more interesting than this one, because oh geez, this is exactly what we were expecting: an aggressive Trump, a defensive Biden. End of story. It is basically a 1 hour long stupid fight between two very different and opposite visions of the world, when in the same time we do have two very opposite and different psychologies. Definitely boring stuff out there. But anyway, what matters is how the market reacted overnight, right after the debate. We had quite some early reactions, and they are what I definitely felt when I recorded yesterday's podcast, in which I never felt that the market was really sending some bullish signals, but more mixed feelings, contrasted signals. So this is what we're going to unpack today. Let's go for context analysis. All right, so as you can see, the sentiment hasn't followed what's been said yesterday. I was questioning the fact whether or not these things was going to open up further and further away, signaling that the dumb money would basically keep on selling a market that goes up. But instead, as you can see, the market stopped rising, and basically what happened is that people have been stopping the positions as well. So it was really a one-shot thing. Definitely happened on Monday. We can be sure that it has been market making throughout the day. Basically, retail traders were selling, market makers decided to buy, and to just basically flush them out the game, but push their resistance. And as we've seen yesterday, the resistance holded on, and that's definitely the high points of yesterday levels. So it's not really pushing further than that. It's really reaching out to resistance, bears holding on, and basically it's a stupid battle between huge supports and huge resistances. So anything that happens in the meantime is really all about bringing neutrality to its best possible way, building ranges. Okay, what matters in here is that we finally managed to dip into the more professional approach of sentiment. I mean, fear and greed is much more representative of what an actual trader looks like in terms of what we feel about the market. So we really felt contrasted recently, and I always made it clear, if you had radical visions, you probably were wrong. So now we're dipping a toe below 50. That doesn't mean we're nearing anything too much bearish, whatever. We're just, going to deteriorate the sentiment. And that's exactly what I thought. So we're actually starting to dip a toe below 50. And yeah, that's a low point we haven't seen for months in terms of professional sentiment. Though I suspect the professionals are less likely going to support prices, but most likely going to demand for cheaper prices when they want to get in. That's basically what I think. I don't think the smart money is getting any bearish. It's just that they're going to ask for more appropriate prices in order to buy. So anyway, elsewhere, this is where we got some other stuff to care about. Pretty neutral session for the cash session, low volumes once again. Everything happens in the future markets, derivative contracts, hedging stuff. Like I told you, it's really professional management at play right here. Hedging the market, arbitraging instead of dumbly buying or selling the stock market and figuring out trends to come. No, it's really all about gambling in between without taking too much risks, which means buying something, selling something. It's really a hedge party at play right now. What matters out of what's been happening throughout the latest 24 hours is the Nikkei. And that's basically what I told you yesterday. Have a look at this motherfucker. This is where the game is settled right now, and where the new arbitrages might be settled. And as you can see, this is exactly what I feared. The Nikkei was trying to break, but I told you, if we make an upside candle followed by a doji and reintegrated by a negative candle today, which is exactly what we have, okay, that's not going to be a good sign. That means we've created an evening star rejection out of a resistance. Try to break, failed, reintegrated. Normally, the immediate action is breaking down the support right after and see if we can hold this one. So now we have huge bearish pressure with a deteriorating sentiment, and where I think the smart money is definitely looking at what happens in the Nikkei. But it's still not enough. We will see that the USD/JPY isn't yet falling off a cliff, signaling that there are still some mixed feelings regarding what the Nikkei has done overnight. So I'm going to need confirmations by tomorrow, but if tomorrow is going to confirm and USD/JPY starts to deteriorate, I think this is not a good sign for stocks, but not necessarily an immediate end of the world, okay? Just look at the bonds. The bond market isn't moving at all. And as long as this one doesn't confirm, and as long as the VIX doesn't give us an information, neutral stance. And if you have any radical visions out of there, you're just going to be wrong. So range until further notice. What's going to lead us to break either to the upside or to the downside is what we're going to have to follow. Okay? Until then, just don't be dumb. Just don't make too radical calls. It's more about having a neutral stance at the moment. Let's have a look at the charts to see if this neutral stance is still at play. All right, what do we have in the broader picture stuff and what is new since the last time we talked to each other? So basically, we left each other in here saying, I don't really mind what the market is going to be doing, but there is very likely resistance going to be built out there. And even noting the fact that we go out there with a huge trending behavior, lots of overloaded pattern and stuff like that, that would normally signal that a trend has started. The fact that we're losing strength out of this area, which is the 20 negative period moving average, definitely feels like, oh man, I don't think we're actually trending out there. I just think we're market making the movements, which lead me to believe that I'm looking for the way we will consolidate later on. Okay, so I would say looking at the next 48 hours to see how prices behave. And as we can see, we had a consolidation. We can definitely see that there are two sets of waves leading us back to an approximate 38% Fibonacci retracement. Oh crap, that could be a pullback opportunity. So if this really is a trend, then today we might eventually be dealing with a pullback opportunity. We are in the trend channel area close to a Fibonacci, and we do have trending signals. So we actually got everything we need to consider a pullback as probable. So if this really is a trend, this is the opportunity for those who wants to follow it to get on board. The question is, what's the nature of the lower time frame signal? And I think that's where the game settles. If we go 15 minutes, and studying how this bottom has been risk managed by those who are trading it, we'll see what about it, okay? So first of all, what we have in here is an aggressive context. Remember that the shaded grays, the shaded colors, blue or red means trend following opportunity. These means reversals, okay? Or harder context, counter trendy context. So in here we do have a bullish counter trending context. Jesus fuck, what the hell is that? We're supposed to have trend follow opportunities. So this isn't the best case scenario, but that doesn't mean this is bad, okay? It just means the algorithm is detecting a context, just not necessarily the one we wished we have. But it's still great. I mean, the algorithm sees something, that's a risk limitation. Now let's have a look at the signals, okay? Okay, we do have cyclical behaviors, but oh man, we've got nothing better than just a tiny little divergence, and I actually don't even see such a thing on prices. I see just a single straight line heading to the downside. So I wouldn't call that a viable dip, but we do have this breakout pattern, which is leading us to a temporary target that is limiting downside potential. So the only thing we've got for risk management is a time-limited offer. That doesn't mean it's not going to work out. This is a totally viable signal, but that means the more time we spend out there, the least stronger the signal is going to be. The weaker the signal is going to get, because after the trial period expired, we're basically going to have the all available time to get to new lows. So as long as we remain on top of this thing, and as long as time is of the essence in here, we still have viable probabilities for rebounds. So I would say what that leads me to believe in these contexts is, first of all, the moving averages are bullish. So for a trend following context, I'm totally okay with that. The risk management isn't that great. And I would also note the fact that we're dealing with the exact same area that the bears have sold the other day, and they have got market make later on. So what matters to me out there is that I can definitely see that the market could be on the verge to build a huge triangle. And if that's the case, then we could go straight line market making the guys in the other way, just flushing out everyone into the center area of the maze. So I would say okay for a trend follow opportunity for those who have a very strong bullish bias in this market, and I would understand that. But be aware that this is not without consequences. You're definitely taking some risks out there, so limit the position sizing. Because if you're really buying strong, what you're going to be doing is probably just fueling your own market making in the opposite direction. Just like the bears in here who thought, oh man, I'm right, I'm not triggering my stop loss, I'm going to reinforce my positions and so on. They basically overexposed themselves, got flushed out by the market makers, and like I said, they automatically fueled their own failure. So don't be dumb, just be smart enough. Like, if it doesn't work out, just get the fuck out. And you know that the next area is going to be minimum 61% retracement, where you got a volatility boundary, and in that perspective, you will have also a third range boundary on the higher time frame. Because if that is a range, which let me be clear, definitely think is at play, I don't know for sure. As long as this is a possible pullback, I would say, if you want to trade it, it's up to you. I don't, because I have a neutral bearish bias. Therefore, trend following to the upside is definitely not part of my plan, but maybe I'm wrong and you want to profit from this. I think what's at play is a range. So I would call for the third range boundary in here in the 1 hour chart time frame. Regarding the violence of the first range boundary, all right, this is first to second. So this is the first wave. We're probably building the second as we speak. Though I think we should be patiently waiting for this area where a third range boundary is going to be appropriately dealt with. And once again, just for the purpose of what's been said yesterday for the cryptocurrency sector, we've seen the high likely probability of these same triangles to occur into cryptocurrencies. So today, what I have is just the same feeling. I think that what we're dealing right now is just an intermediate price, totally boring, in which we're very likely going to build short-term ranges without probably keep on pushing and rejecting this area later on. So I don't think this is where the buying opportunity shows up. I think this is where the third range boundary is. Remember that the third range boundary is the low risk opportunity in a range, the only low risk opportunity. So if you want to buy, I would say this area is definitely where you can do it with a limited risk taking. Okay, of course, breakdowns may happen lower than this level, but once again, when you care about breaking down, you need a trend line. You need something to break. So I would say we're definitely not ready to bearish breakdown right now. I think all we're ready to do is just building an ugly fucking triangle, and eventually later on breaking either to the upside or to the downside. But I don't know. I would just say that we do have another presidential debate down the corner. I think that's the only thing the market cares about right now. And today didn't nearly give us any answer. So I think what we're just doing right now is just building an ugly range. So if you're patient enough to catch this third range boundary, I think this is a tradable system. If you really want to buy yourself into a probable pullback, then be aware that if this is a range, having trending behavior means stop losses for you down the corner. Okay, so accept being proven wrong. I think that's the only rational thing to do, just like those who were trying to trend follow to the downside have been proven wrong earlier this week. That's it. I think we've got more than enough information to go conclusion. All right, if we sum up the core informations we just talked about, it totally feels neutral and it doesn't look like we do have any additional information. In the same time, we see that the smart money sentiment is slowly but steadily deteriorating without nearly going end of the world territory. So it isn't like, oh man, this is really bad, we need to sell, whatever, but just like it's not improving, it's deteriorating. And even if we have financial support, it still looks like this is not the immediate appropriate time to buy. Feels like the best case scenario is ranging this stuff and eventually rebounding with a positive news flow out there. Until then, I think the bears have settled their camp. The bulls are trying to support the 23% 4-hour chart Fibonacci retracement. But until then, the only thing we're probably going to build is an ugly fat range. But until then, we came from this triangle to the downside. The likely probability is to keep on pushing to the downside, of course, later on, but that requires a catalyst. And I would definitely say that we don't have any short-term catalyst available right now to push prices more to the downside. So until then, I think we're just waiting for something to keep on falling, but we have none. So waiting feels the most appropriate thing, either into cryptocurrencies, stock market, though they're going to be short-term ranges. But the problem is the short-term ranges are inside bigger ranges, which makes it absolutely unable to trade. So at some point, you need to learn that patience is key. Either you're going to be trading liquidity on the intraday levels, some scalping or intraday stuff. This is totally available to do. But if you're like more of an intraday trader or intraday swing trader, you're definitely in the center of a maze that requires not immediate actions, but really patience. So run the fuck out of this. Sometimes there's just nothing to do because whatever is available is just too risky. So if you really want to trade, be aware that the risk is there, that the chaos level is at its highest. So if you really want to get to jump in, just be sure that you lower the position sizing, okay? The higher the chaos, the lower your risk taking should be. That being said, I think that's more than enough for today. See you guys later.